Everyone talks about renewable energy project, but do you know there is a company fully dedicated to financing them? I'm talking about Indian Renewable Energy Development Agency Limited, IREDA. It was set up by Government of India to promote and finance green energy, from solar and wind to hydro, biomass, ethanol, and even green mobility. Today, IREDA is the largest pure play green financing NBFC in the country, holding the prestigious Navratna status and classified by RBI as the infrastructure finance company. In just the first half of financial year 2025, it disbursed nearly 9,800 crore with a loan book of over 64,000 crore spread across 23 states and 4 union territories. With India pushing hard for renewable energy, IREDA stands at the center of this transformation, financing the future of clear power. So, is IREDA just another government NBFC, or is it the silent growth engine of India's green revolution? Let's deep dive into it. Let's understand the fundamentals of the company. The company has a market cap of 45,192 crore and its stock currently trades at around 161 per share compared to its 52-week high of 240 and low of 137. From the fundamentals point of view, IREDA has a P/E ratio of 28.9, slightly higher than the industry average of 25.4, showing the investors are willing to pay a premium for its growth. Its ROE stands at 18% and ROCE at 9.3%, which shows it is generating good returns for shareholders. The company has shown operating profit growth of 23.5% and strong 3-year sales growth of over 33%, backed by diversified loan book across solar, wind, hydro, ethanol, and green mobility. On the balance sheet side, debt remains high at 64,740 crore with a debt of equity ratio of 6.3, which is naturally for financing company. Still, it maintains stability with a decent cash reserve of 671 crore. When we look at the valuations, the stock trades at a price to book value of 4.2, which is higher than the industry average of 2.6. Its intrinsic value is estimated at rupees 88, while the current price is almost double at 161, indicating the stock may be priced ahead of fundamentals. Its EV to EBITDA ratio is 17.2, which is also higher than the industry benchmark of 10.3. This suggests the stock is trading at a premium compared to its peers. Overall, IREDA is backed by Government of India, classified as an infrastructure finance company, and holds Navratna status. With India's push for renewable energy, IREDA remains a strong strategic growth story, but investors need to watch valuations and debt level carefully. Let's take a look at the financial performance of IREDA over the last few years. Back in 2015, the company's revenue was about 1,100 crore. By 2025, revenue has jumped to almost 6,750 crore, showing a massive multifold growth in just 10 years. Even on the trailing 12-month basis, revenue has crossed 7,100 crore, proving strong demand in the renewable energy financing. Interest expenses have grown in the line with business from 646 crore in 2015 to over 4,300 crore in financial year 2025, that is the trailing 12 month, since the IREDA operates as a financing company. But what's impressive is how financing profits have grown from just 384 crore in 2015 to more than 2,100 crore in 2025. The financing margin, which tells us how much profit the company makes after interest, dipped to just 11% in 2020 but has improved steadily. By financial year 23 and 25 and 24, it touched 33 to 35% and currently stands at around 27%, still much stronger than earlier years. On the bottom line, net profit has seen a big jump from 272 crore in 2015 to a peak of nearly 1,700 crore in financial year 2025. Even the EPS, which was less than rupees 3 in 2019 and 2020, has now grown to above rupees 6 per share. This consistent growth in revenue, profitability, and EPS shows the IREDA has scaled up strongly in the renewable financing space. However, margins do fluctuate with interest cost, and that's something investors should watch closely. Overall, the trend is clear. IREDA is not just growing, is becoming more profitable and efficient year after year, making it a key player in India's green energy journey. Now let's look at the shareholding pattern of IREDA. This tells us who owns the company and how it's changing over time. The Government of India or the promoter held a solid 75% stake right from December 2023 up to March 2025. But by June 2025, this has reduced slightly to 71.76%, meaning the government has diluted a small part of its holding. On the other side, we can see more participation from investors. FFIs or foreign institutional investors increased their stake from just 1.3% in March 2024 to over 2% in June 2025. This shows rising foreign interest in the stock. The DI or the domestic institutional investors are very low earlier, less than 1%, but by June 2025 they have increased to almost 3%, which is a positive sign of growing confidence from the institutional investors. Public shareholding has gone up from 18.7% in December 2023 to 23.2% in June 2025. The number of shareholders has more than doubled during this time, from around 13.7 lakhs to nearly 26.7 lakhs investors. In short, the trend is clear. While the government still holds the majority stake, both institutional and retail investors are steadily increasing their ownership. This widening investor base adds more liquidity and market confidence in IREDA. Now let's look at the technical analysis of IREDA. The stock has made a strong listing rally in 2024, but after touching high near 310, it enters a correction phase. From there, we can clearly see a downtrend channel with lower highs and lower lows. Recently, the stock has took support around 140, which is an important short-term support zone. Below that, the next support zone are 124 and 95. If the stock stays above 140, it shows strength. But if it breaks, then 124 and 95 could come into play. On the upside, the immediate resistance is at Rs 177, which is the upper trend line of the falling channel. If the stock manages to cross and sustain above 177, we may see momentum picking up around 219 and eventually 309 if the long-term rally continues. Looking at the volumes, we can see some buying activity near the recently low, which means accumulation is happening at the lower levels. So in short, 140 is the key support and 177 is the key breakout level. Until the breakout happens, the stock may remain in this range. Long-term investors should watch how the price behaves near these levels before making fresh decisions. Overall, what we can see is that IREDA offers a range combination of government backing, financial stability, and growth potential in the renewable energy space. For the disciplined traders, short-term buy on dips opportunity exists. For investors in the long-term, hold and accumulation stock in the green energy segment. This video is for educational purpose only and is not a financial advice. It should not be considered as financial or investment advice. Do your own research before investing. If you found this video useful, please do like, subscribe and share. Thank you once again.